Welcome to the 2025 Economic Preparation in the Present channel. Thank you for joining me on this brief June 1st Sunday edition 2025. New month, new beginnings, new starts for everybody from Wall Street to Main Street to everybody in between. Please be sure to hit that like button or subscribe button as we interpret financial news on a daily basis. And I thank you for your support, ladies and gentlemen. As always, the questions are enlightening in the comments as well as the concerns, and I do not take them lightly as well. So right now we're looking at an article from CNBC.com. Stock futures, quote, inch lower to kick off the start of a new trading month here in June. We're deep into the second quarter of this financial recession that many are believing that's coming to the Western world, surely in the fall and in the winter time. And that's okay. There's still been some bright spots. We're still adding jobs to this economy, I must say, even that is only at the pace of 100 to 200,000 jobs per month, according to the latest ADP data. And also the good news is that the economy is still chugging along. We still have one of the world's largest economy here in the U.S. right now. So stock futures fell on Sunday today, June 1st, as they get ready for the kickoff the new month here. It was down not too far, just 2.2 percentage points. Futures were down 83 points, or 0.2% there. S&P 500 closed out the month of May with about a 6.6% gain, which was great. It's the best performance since November 2023. And so there were some bright spots, but everybody knows that there's still volatility in the stock market because of the debt load, the empty promises of lowering this inflation that was supposed to be quote unquote transitory, according to the Federal Reserve. And now we see that that's been a lie. It's not transitory. This is something that's going to last beyond this presidential term. And it's something that was through Biden's term, now it's going to be through Trump's term, and it's going to continue on through the next person's term. So high prices are here to stay. Lower quality service is here to stay, and most Americans have figured that out here. Amid tariff agita, Wall Street is, quote, a bit more cautious than normal on second quarter earnings. So everybody's looking forward to second quarter earnings here, especially with these dollar stores. You know, the media has highlighted, so I was watching NBC the other day, they highlighted Dollar Tree, why many people shop at Dollar Tree, Dollar General, Family Dollar's closed like 500 stores last year, as you know, when they merged. But people shop at these discount stores, not because they don't like name brand items, it's because they want to get the same item for cheaper in some cases. Now, Victoria's Secret and other retailers are going to be reporting during this week. So we have a report here of earnings that are going to be coming in here. Now, some stocks are going to be doing well here. Like I said, it's not just all retail stocks it's going to be pummeled. Some retail stocks like Gillette, Dollar General, Dollar Tree, possibly some other stocks that people, essentials, discretionary items that people use, because people are only buying essential items right now, as you know, food, water, shelter, medicine, security items, quote unquote. Okay, people are only buying essential items. They're eating out less. Most Americans are eating out less. Yes, they still go out occasionally, 1 to 2 times a week, but it's not as frequent as it was post 2020, pre 2020, excuse me. So this is what we're seeing here. The jobs report comes out on Thursday, as you know, for the May jobs report, Thursday at 8:30 a.m. Eastern time. So we're going to see, last month in April, we added 177,000 jobs. That, quote unquote, according to CNBC.com, that defies expectations. They expected, this was revised downwardly because they were expecting 185,000 jobs. They only got 177,000 jobs, so pretty close, not too far off there. Unemployment rate, according to the official BLS data, the Bureau of Labor Statistics, is still hovering around 4.2%. But you and I know on this channel and other channels that the unemployment rate is actually around 10% if we count those who are underemployed, meaning that they are working 2 and 3 side hustles to make up for one job, and those who gave up looking for work and started their own, self-employment or 1099 or something under the table. So the numbers are actually higher than this unemployment rate here, and that's what's going to be the killer. That's what's going to kick off this mild to moderate recession, meaning that something's going to last longer than 2 to 3 years, is the unemployment rate and the high prices on goods and services to do business for even those who remain. Even if you automate this or try to automate this, you're still going to face the problem of high production costs and people with less discretionary income, meaning less money to spend after the bills are paid and after any type of auxiliaries or family or kids are taken care of. That's going to be the problem, is that average hourly wages are not going to be able to keep up in these Western countries like the U.S., Canada. They're going to feel it. Europe is going to feel it. Some economies, not all in Europe, but some economies are going to feel it. Say like Germany, Spain, Portugal, Romania, the UK, obviously. So this is what's going to be happening here. The unemployment rate is going to begin to go up to 5%. We're just now coming around the turn here. You won't see the unemployment rate. It's going to hold steady here. They're going to say, oh, it's 4.3% the next month, 4.4, and there's going to be a big spike up right at around, I would say, the end of September, October. You're going to see a spike in unemployment rate toward 5%, and it's going to continue to rise throughout the remainder of 2025 and into 2026, and that's what's going to cause a little bit more panic on these markets here. Healthcare continued to be the bright spot of this market, adding 51,000 jobs last month in May, as well as transportation, warehousing, financial services, and social assistance. The federal government reported a loss of 9,000 jobs, obviously led by DOGE and their efforts to trim the payroll of the public sector, and so that's where you see that decline there. But wage growth is down to 3.8% according to this chart here. This is by the U.S. Bureau of Labor Statistics here. The data is accurate as of May 2nd, 2025, just about a month ago. So we see that the wage growth is down. This net thing I was telling you is that the average hourly earnings, although it seems high on paper, is not keeping up with the cost of living. I don't need to tell you that. Every time we go to the grocery store, every time we go to the gas station, pay your utility bill, it is super high. And we haven't even gotten into the peak of summer. Thankfully, summertime conditions, at least for the East Coast, hasn't been quite as stifling as once reported. Now, on the West Coast, they've had a warm wedge of temperatures hot in LA and places like that, San Diego and up to Seattle. But on the East Coast, they've had temperatures kind of, a little bit below normal. So we haven't had real summer yet, but it's coming, especially in late June and early July and into August. We're gonna feel it. So we'll see what type of bills, how the bills spike up with that type of inflation. But in the meantime, the media, and according to FoxBusiness.com, they're spinning the article that egg prices have dropped 61% since President Trump took office, and that may be true. But the problem is that once one thing drops, another thing goes up, and you know that to be true. So let's say eggs go down 61%, that's true, but then toilet paper or something else goes up, or lumber goes up, or or water, the price of water goes up if there's some kind of pipeline break, or hurricane or something. So one thing drops, another thing goes up. That's the name of the game. They drop one thing, yes, egg goes up, but next week gas goes up to $5 because there's a blockage in the Suez Canal or something. So everything is a game of up and down, according to the quote unquote markets. And that's when they're going to get to limits. But this does bring up a good point though. The limits on the thing. You want to get to a point where when you prep, you want to have items so you don't go to the store and say, I'm sorry, ma'am, or sorry, you can only get one or two of these per week. Or such and such, because remember, rationing in the 70s, late 70s, 80s was a big thing. So that's going to be coming back, and so you want to get to the point where you don't need to go to the store every week and have some of these non-perishable items, not eggs, but some non-perishable items like canned goods, hurricane equipment, or if you're in a hurricane zone, or flood equipment if you're in a flood zone, so you don't have to keep going back, because they're going to limit people on these supplies, especially in the western side, the western world, at least hemisphere. So just something to think about. God bless. Enjoy the rest of your weekend. Get out, have fun, get some fresh air with friends and family and cohorts and chums. And I will see you later on this week when we start talking about the earnings, the job reports, and other concerns. Thank you for listening. God bless. I'll talk to you soon on the next episode. Take care.